Hi, everyone. This is Jason Bierach of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but I'm glad I've been getting to know him for a couple weeks now. He seems like a really good guy, very smart too. He's a CPA, CFP, which is a financial planner, a certified fraud examiner. He's the author of a new book called Financial Judo, which we're going to talk about. And he's the founder of Kennedy Financial, which is a volunteer-based nonprofit company that helps people with financial problems and makes financial decisions. Philip Kennedy, thank you for joining me today.
Jason, thanks for having me on here on St. Patrick's Day. It's an honor to be on your show. I appreciate the interview, especially since you could be out at some trendy DC bar having a overpriced beer.
Or an Irish car bomb, yeah.
Right.
Yeah, that I did a lot of that in college. Probably too much of that in college. My liver is in recovery now.
Yeah, well, mine too. That's why, once you become a father, being a parent is your hangover. So I've pretty much given up on drinking altogether. But good to be with you.
Well, you could still maybe make some corned beef or something like that. You can still maybe get a little festive. You can put some green dye in some type of drink.
Yeah, we did. My wife made a nice corned beef and potatoes dinner. So
All right.
Followed up with an interview. It's a very special day here on St. Patrick's Day.
All right. Well, I want to talk about your background a little bit. You have a very interesting background. You have a lot of certifications. You seem like a pretty young guy. You've put yourself through hell, I guess, getting some of these certifications. I have friends who have gotten one of these certifications, and I can imagine three of them. So tell our listeners then what drove you then to get all these different certifications and start your company, Kennedy Financial.
Well, my grandparents were raised through the Depression, and so I have a great relationship with my grandmother. Unfortunately, my grandfather passed away when I was only 5 years old, but he was a steadfast believer in education. He passed the bar and went on to work for the government in a steady job, and he raised 8 kids, which on one salary, his wife stayed home. So education in the Kennedy family has always been very important. I feel like it's always smart to have something to fall back on. We live in a volatile, dangerous world in terms of employment, and you need to be able to constantly improve your skills. So, everyone knows what a CPA is, and I felt like it'd be smart to get that license. I'm licensed in Virginia and Maryland. And in terms of being a fraud examiner, it just seemed like a natural suit. I didn't really enjoy auditing and accounting as much as fraud investigations. So it was a natural progression toward the CFE. And then in terms of the CFP, I'm not a certified CFP yet. I'm a CFP candidate. The difference is you have to pass the exam and then work for a financial advisor for 5 years, which is difficult if you're already in a forensic accounting and fraud investigations field. So I am indeed, though, an accredited financial counselor. I like to say that as opposed to a CFP, we take your emotions into account. And really, that's important when managing money. I think a lot of it is emotion rather than intellect in terms of making smart financial moves. So this is how I've ended up with these credentials, and I think I can be of service to folks.
It's very interesting. I want to talk about your book now. Your book has an interesting title. It's called Financial Judo. For listeners out there who are maybe not familiar with that type of martial art, what is Judo and what inspired you with the title and to write the book?
So I'm not proficient at Judo myself, but I am a fan of mixed martial arts and the UFC. And I have a friend who practices Judo. And the way he always explained it to me was it's the ability to force an opponent into submission by using the minimum amount of physical effort. And I really like that word minimum because nowadays it seems like we are hit with so many images of folks who are expecting the maximum effort. Things like CrossFit or insanity in the physical fitness arena. It seems like, hey, if you're not putting in 110% every day and driving yourself to the edge, then you're really not doing this right. And it seems like, there's no one in the fitness community who says something to the effect of, hey, just eat less carbohydrates and go for a walk. That doesn't seem to be a popular idea. And then another example would be in terms of the expectation that we always need to be driven towards maximum effort and you can appreciate this since we both live in the DC area, that just by the way people drive, you see folks, they'll be on your bumper, you're in the far left lane, and they have to zoom to the middle and jump ahead and get one car length ahead. And it seems like this constant maximum effort has become part of our culture. And I really wanted to bring forth the idea that, look, when it comes to your money, you don't have to do all of these wild things that are suggested by Jim Cramer. You don't have to be invested in FANG stocks. You don't have to follow financial advice from somebody who's really nothing more than a salesman. You can just take these prudent, tried and true methods and apply them every day. And although, they're not going to be really sexy to talk about at a cocktail party, they work. And frankly, I think we're certainly in a recession now. And if I may, with your audience, I think we've already been in a depression since 2008. So the old rules for money might be going out the window, and that's why I wrote the book. I was compelled in 2015.
Sounds very interesting. Yeah, one of the things about judo is it's like using your opponent's momentum. So your opponent, is aggressive. They attack. I guess all these salespeople coming at you, trying to sell you mutual funds and stocks and bonds. Don't buy gold. Maybe you should put all your money in gold. It's confusing to a lot of people. There's information overload. And, I'm a fan of Ronda Rousey. She has a black belt in judo. That's that's my knowledge of judo, I guess, is that her explanations of it where, it's you're a smaller person and your opponent's bigger, and you have to figure out how to use their strength and momentum against them to counter that. So it's a very interesting book in terms. In terms of the rest of your economic philosophy, I completely agree that I think we never really recovered, other than the shale boom, which was financed again by cheap credit.
Right.
We had triple digit oil. We had triple digit oil for a long time. And that plus Wall Street investment banks, the large guys having access to the Federal Reserve, they were able to get that cheap credit. And these guys were able, to hedge their oil prices for 2 or 3 years and lock in debt. I mean, these are not economic projects at these prices. And yet these shale producers keep pumping oil, I guess, until they go bankrupt. It's just crazy right now. And look at all the job losses in those 3 states. So I would just add to your point there that I don't see a real economic recovery outside of DC. I mean, you live in DC, I live in DC. We've discussed this before. I mean, our listeners should come here. If they don't believe us, go and drive to some of the 3 highest average median family income counties in this area and look at the construction cranes. Look at these, high-end condos and all the things that are being built with cheap credit right now.
Yeah, this is abnormal, and this is what I like to tell the folks that I counsel on a daily basis is if you're living here in Northern Virginia, supposedly the United States is the richest country the world's ever known. You're in the capital region of that country, and 2 or 3 of the richest counties in America are right outside that city. And you're busy thinking that you're supposed to have granite countertops and stainless steel and a 4,000 square foot home, and drive brand new cars with big heavy car loans. And this is what I'm constantly trying to overcome: is this is not normal. Normal is living within your means. Normal is spending less than you make and having an emergency fund and being prepared to weather some kind of financial emergency. But the facts don't bear that out. 8 in 10 Americans have debt, and according to a Pew survey, 7 out of 10 believe that debt's a necessity in their lives. So if you have debt, and even if you have money in your savings account, you really don't have any net worth. So how are you going to have the ability to even buy gold and silver and mining stocks and other things that we think are going to benefit during this depression? You're not set up to weather this storm. And so frankly, that's really been my goal. And everything I do is pro bono. And people can reach out to me anytime, and I'll share my information later. But my main goal is here to get the word out as much as possible. My brother and I like to joke that we're the Paul Revere of personal finance, trying to warn everyone that a depression is coming. There's no doubt about it. This is not, people like to say, this time is different, and this time is not different. Anytime we've seen some of the economic data that's come out, it's always preceded a recession. And like, I think, we never really got out of the situation that we were in back in 2008. It was just completely papered over. So really, we haven't fully paid for the consequences of all those economic decisions. QE, quantitative easing, and 0% interest rates supposedly saved us. But all they've really done is hidden the problems. And one extra thing I wanted to share, Jason, was that one of the reasons that I've kind of formed a lot of my opinions is that I happened to be in business school during 2008. I was getting my MBA from George Washington University, and you're going through all these courses, and one of them that they require is the ethics of business, right? Everybody has to be ethical now, and I think what's more ethical than following capitalism and providing jobs for people so they can feed their family? But we happen to be going through the worst financial crisis since the Great Depression, so it was fodder for a lot of these discussions. And the conclusions that a lot of my GW professors reached was that it was Wall Street greed that caused the financial crisis. It had nothing to do with decisions by the Federal Reserve. So it really put me on track to kind of research for this for myself. And I found a book called Meltdown by Dr. Tom Woods. And in that book, within 10 pages, he says, hey, look, we have YouTube now, and there's evidence that everyone can see. And if you go on there and look up the name Peter Schiff, it's there clear as day. And so really it was the first time that I saw the Peter Schiff was right video. I had an epiphany. And that's why I've been pursuing this work ever since.
Peter Schiff was actually one of the first people that woke me up too. I was a financial advisor working at one of the larger firms trying to sell, mutual funds and insurance and mutual funds for stocks and bonds and things like that. And then the 2008 crash hit, and I was like, well, I'm not going to be able to sell anything right now. No one wanted to buy because obviously you said people can't control their emotions. They don't want to buy at the bottom. They don't want to be the Warren Buffett quote is, be greedy when others are fearful and fearful when others are greedy. They don't want to buy when there's blood in the streets. But yeah, I agree with you that we are in a depression right now. Unless you know what you're doing, you understand that things are going to get bad, and you've built, an income for yourself where it's diversified. You have assets coming in, generating cash flow. You're careful with your debt and things like that. You actually have a story about debt with you and your family. You were able, obviously when people get married and start having kids, normally the debt doesn't decrease. Normally it's a parabolic function, right? And
Right.
You were actually able to get out of debt. That's pretty amazing. If you want to tell our listeners a little bit about that story.
Sure. Yeah. Well, I think before anyone decides to get married, they really should sit down with a financial counselor and go over the debts that each party is bringing into the marriage. Unfortunately, my wife and I didn't do that, but we have a great ability to communicate with one another besides that. So, first thing was first, hey, you're going to work every day, you're getting dressed up, you're making sacrifices, you're fighting traffic, you're getting your laundry done at the dry cleaners, you're spending your day with people that maybe you wouldn't otherwise choose and leaving loved ones that you'd rather be with. So why not have something to show for it at the end of each payday? Why not have some money in the bank account? And so this is the conclusion my wife and I reached. And so we started searching for ways to eliminate debt. And let's face it, like it or not, Dave Ramsey is pretty much the most well-known debt elimination guru in the country, and I'll get into him a little bit later. But we did follow his plan all the way through, I think, baby step number 3. And frankly, it does work because his idea is, look, you pay off the smallest debt first, you feel good about that, and then each month you build up a debt snowball to work it down. So between my wife's income and mine, we paid off, I think, I can't remember, it was tens of thousands of debt in about 3 years, and most of that was student loans. But and then that's part of the book Financial Judo. I teach you how to do that. But again, I'm a believer in the Austrian School, so my opinion diverts from Dave Ramsey right after baby step 3 when he starts talking about investments.
Yeah, that's a good plan. I mean, with the people nowadays, though, it's so tough to even keep your head above water in terms of, having a normal life, being able to pay back debt. A lot of people, like you said, you moved here from to the DC metro area. You didn't grow up here and live here, but a lot of people who have lived here, they have I guess, this perception that they have to have a higher standard of living. So, they've spent a lot of money on probably things they don't need, things that they want, and they've used debt to finance it. You add that with the student loan debt, and by the time they're ready, they're out of college, they're begging for a full-time job in a lot of cases, or they're trying to piece together a life with 2 or 3 part-time jobs. It's really tough even to get started. So a lot of our listeners are young adults, or they're entrepreneurial, or they're in college still, and they're looking for advice how to get started. So you think then that the basic steps should be in just eliminate the easiest debts first so you feel a little bit better, and then, just make a plan to start reducing your lifestyle or trying to be more efficient?
Yeah, I think the first plan would be to save up $1,000 because typically when an emergency happens in one's life, they need a new transmission, they need a plane ticket across country because a loved one died, they suddenly are slapping it on a credit card. And really, in my opinion, credit cards are nice, but they're some of the worst things ever invented for young folks because, you're just getting started. You really don't have that much discipline when it comes to your money. And let's face it, every retailer accepts a credit card now. You swipe it, you don't really think about it, and then it really doesn't take long before you start to have a revolving balance. And now you're borrowing from the future, and this is what our government has done. You hear politicians say, "Look, now you're expecting our grandchildren to pay off this debt," and that's really what we have done when we've racked up another 10 trillion in debt on top of the previous 10 trillion. Is we're expecting our younger generation to pay for the bad decisions of the older generation. And if you do that in your household, you really can't make the Ponzi scheme work as long. Eventually, your credit is ruined, which affects your ability to buy a home, which affects your ability to have a family. And so this cycle just gets worse and worse. So that's why I say, put $1,000 cash in the bank. That, believe it or not, when you put cash in a savings account, it almost seems to make problems go away. My wife and I have a 6-month emergency fund in cash. If I were to suddenly lose my job, we could get through the next 6 months and we would be fine. And, hopefully I would find a new job in that amount of time. But it's funny when you've got that much cash in the bank and it's not really gathering much interest, it tends to make problems go away. And so you kind of look forward to the day that you have an issue because you're ready for it. Hey, I can pay for that new transmission and it's going to be no problem. So put $1,000 away. Then after that, start working up from your smallest debt to your largest. So that'll probably be, go from the credit card all the way up to your 20, 30. In some cases, I've heard stories of $100,000 student loans for liberal arts degrees. I wish I could have gotten in touch with that person, before they went to college. They asked me, Phil, what am I supposed to do? I say, frankly, your job now is to become an evangelist against going to this much debt for a worthless college degree. And unfortunately, they kind of look sideways at me, but I really mean it. Become an evangelist against overpriced college degrees. I think that's the best way we can serve, your nephews, nieces, younger cousins, younger siblings.
The news stories, I'm not sure if you've seen this, but the news stories coming out now, there's actually a lot of college students leaving the United States. Maybe they came from another country or they just want to start over. They're not paying the debt and they've gone to Canada or they've gone to Europe or they've gone back to South America and they're living their lives. But I guess, with the big data and the way they track financial transactions, if they ever come back to visit in the United States, the creditor, the phone calls from the Sallie Mae, the student loan creditors start nonstop. So yeah, once you get to that level, you're in a lot of trouble. But I think the economy can be fixed longer term, but I don't think the people in power here in DC, the bureaucracy, the Keynesian politicians, the central bankers, they're willing to do the right thing long term because it would be painful in the short term and it would probably cost them their jobs. I mean, if we cut government spending and we cut taxes, there would be the ability for entrepreneurs and small business to start thinking about, investing, making long-term investments in research and development and creating value and things like that, and be willing to hire people long-term instead of the payroll taxes, Obamacare tax, all these things that are just being layered on right now. And that's what's creating the misallocation of capital and too many part-time jobs in the economy instead of full-time ones.
No, you're right. And I am optimistic in the long run, but in the short run, and I'm thinking, short run in my definition being at least a decade, we're going to go through a very painful period in this country. I mean, you got the CEO of Carl's Jr. coming out and saying he wants robots to replace all of his workers. You have the Sports Authority closing, I don't know, 1/3 of its stores. Joseph Bank closing 250 stores. Retailers are getting crushed, and it's because that they're burdened with all of these high wages, high taxes, and they're trying to get by, by paying their employee a livable wage, but they can't because, the business environment that we're living in is becoming more difficult every day for all these institutions. So, I go through that in financial judo. I talk about some of the retailers that really started struggling in 2015, Walmart, Macy's, all the brands that are household names. And this should be a clue to all of us that things are starting to get worse. Your average person can't afford as much. They're all tapped out. Their credit cards are maxed out again because they think that net debt is a necessity in their lives. And really, that's why I think 2015 was a high watermark for the distance that QE and ZERP can take us.
Yeah, you talked about. I had another point there when you talked about saving your money up for an emergency fund. Now with negative interest rate policy, keeping all of that money in a bank, it may be dangerous if the politicians and the central bankers are going to demand 3 or 4% that you pay per year. So maybe obviously keeping cash is good. Maybe they're going to have to start taking some of that cash out of the banking system though, just in case, so they're not charged every year a high interest fee for keeping it there.
Yeah, well, and if that were to happen, my first advice would be get your cash out. Why not? Show these people a lesson because you shouldn't be paying to keep your cash in a bank. That's your money. So take it out. And what's the stories coming out of Japan, right? That safes are selling at all-time highs and people can't even find them. And that's because they have negative interest rates there. And so people are doing what they should do. They're withdrawing all their cash and doing the equivalent of putting it in the mattress. But this is the consequence of bad monetary policy, and people think this is normal. This is not normal. Our grandparents, as bad as the Depression was, they never considered the things like this. I mean, this really is an experiment. 7 years of 0% interest rates, and here's the Fed meeting yesterday, and everyone's surprised. Jason, I mean, how did you react to that meeting yesterday?
Nothing surprises me. Nothing the Federal Reserve and these Keynesians do surprises me anymore. I don't know if you read our 2015 review, 2016 preview yet, but I basically told people the primer that they should go back and read the 3 main Austrian School books that go through the general theory of Keynes. And I'm just really pissed off at the people who defend Keynes because I don't think they've read like really line by line through the general theory and understand, how insane and corrupt and crazy Keynes was. I mean, he's basically a James Bond villain in terms of what he basically wanted to end capitalism. Once he gets to the epilogue of the book, he talks about wanting to euthanize the rentier and make capital unscarce anymore. But the whole point of saving your whole life and doing the right thing and producing more than you consume and having savings or capital or surplus, that's what you need in the economy to build. And it's the stuff that we have now with central planning and credit and stuff is just mind-boggling. So I mean, it's the interest rate policy in the United States. We've gotten to the point where there's so many credit bubbles, so many asset bubbles that when they collapse, they try to reflate them. They try to put their two heads together and, oh yeah, let's do another round of subprime auto loans. I think they're up to 3 levels of subprime auto loan debt now. It's insane. And so there has to be some type of limit to this because, the U.S. has the world reserve currency, but the other countries are going to say, you know what, the U.S. is spending ridiculous amounts of credit and money printing out of thin air into the system. They're going to say, you know what, we can't handle this anymore because the U.S. is the one that's doing it the worst compared to other countries.
Yeah, I've told my audience that they should go, if they haven't seen The Big Short, go out and see it as soon as you can, or wait for it to come on DVD. It really is. It's like a documentary or a docudrama. But the real issue is that they're going to have to come out with a sequel to that movie in about 7 years. It's going to be called The Biggest Short. And really, I think you had Dave Kranzler on recently. I'm an avid follower of his. If folks haven't read his website at Investment Research Dynamics, that's like a daily read. And the point that he makes is that sorry, I lost my train of thought. That The Big Short really taught us, what those guys were facing in terms of the adversity from the big banks. I mean, here, they're confident in their position and it's taking years to materialize. And, all the while they're being told like, hey, from their clients that, oh, this wasn't a smart move, and then from Goldman Sachs, hey, do you want to unwind your position? But really, they maintained the confidence that it was going to pay off, and boy did it ever. And I think for those who are a fan of Wall Street from Main Street, the last 4 years have been difficult, but the payoff is going to be that much bigger. So as long as you've been following the advice from the Austrian School, stay the course, don't give up. In fact, now would be the worst time to give up, because I think January 19th was probably the bottom for gold stocks. And, I'm on record as saying that I believe that by 2018, certainly by the end of this decade, but I'm calling for 2018, that the Dow Gold ratio will be 1-to-1 again.
It's certainly possible. I mean, the people in power, they're either lawyers, or they can hire the best lawyers, and they can change the rules. So I mean, as well as gold stocks could do, physical gold, physical silver, the people in power can change the rules. So what I just tell people is rule number one is don't put all your money into any one thing anymore, no matter how good it sounds or how cheap it is relative to other asset classes. But yeah, I think gold stocks are a good, if people do not have their position built up in gold stocks, now is a good time on pullbacks to start accumulating the best companies right now. And that doesn't mean go out and, put all your money into one or two small little juniors and hope they drill a great drill hole. I'm talking about companies that can actually generate, some free cash flow at this price. Maybe they have a history of paying out dividends. They're careful with their debt and stuff like that. But you have a specialty in fraud. You're a certified fraud examiner. I read the Harry Markopoulos's account of the Bernie Madoff scandal, and he tried for 10 years to bring it to the SEC and other politicians and other people on Wall Street. He took it to financial journalists there, and he gave them, all the documentation, and no one would listen, which is actually, I think, the title of the book that Harry Markopoulos wrote. How pervasive is fraud then in our government and our financial system, in your opinion, based on your work?
Well, I think with 0% interest rates and quantitative easing, it's created the ripest arena for fraud probably in 100 years. And really, I hate to quote your creep of the week, Warren Buffett, but he said, when the tide goes out, you get to see you swimming naked. And I think really
it's true.
We're already starting to see signs of that. I mean, there's this company, Valiant Pharmaceuticals. It was down on another 11% today. Yesterday, it was down some astronomical amount. And, there's allegations, of course, that Amazon is playing with the numbers through, all these brainchilds that the CEO comes up with. So
most of these, sorry to interrupt you. Most of these publicly traded companies play with their numbers now. I mean, they use. I've had on Charles Ortel, who's he was an accounting major a long time ago, and he's considered one of the better value investors on Wall Street. And he says, these companies every decade, the aggressiveness in the accounting just gets more and more aggressive about what they do. The financial engineering. I'm on LinkedIn, and there's a financial engineering group, and every month or two, there's a new conference with new ways to come up with new financial engineering to cook your numbers.
Yeah, it doesn't surprise me, but again, all Ponzi schemes come to an end. It doesn't matter how big they are. You're right. Harry Markopoulos said years in advance, he warned the SEC, at least starting in 2000, 8 full years before Bernie Madoff's Ponzi scheme collapsed. And I like to use that example with folks because, here's a guy that really feared for his life. He was looking around every corner. He thought, surely, Madoff's a powerful man. People are going to come after me. And if it took that Ponzi scheme at least 8 years to come crashing down, how long do you think the Treasury, Federal Reserve Ponzi scheme is going to take? I mean, it's been going on at least since August 15th, 1971, but I mean, it could still take a couple more decades. It could just be this slow burn that some folks are predicting, but like all Ponzi schemes, it will collapse, whether it's a slow burn or just a sudden realization like an October 29 style crash. It's going to happen.
And in the meanwhile, while Wall Street is bashing gold and the politicians are saying, it's all the rich's fault, like Bernie Sanders and things like that, and some of the professors, you said, it's all capitalism and greed, which is just ridiculous. It's a lot of the problems are government regulation and things like that, and government spending. We have just so much misallocation of capital, whether it's in the US or China or so many other countries, just trillions and trillions of it, that has created, massive inflation in the system that has destroyed the standard of living in the middle class in the United States. We're probably going to have behind the scenes, a lot of people on Wall Street and politicians here in DC are probably buying lots of gold.
Yeah.
And they wouldn't admit that in public.
No, they wouldn't, because they don't want you coming to their house to take it once everything implodes. But yeah, I do have an entire chapter devoted to gold and investing in real money, precious metals. And, I tell folks, look, have at least 6 months worth of precious metals. That's your real savings account. Sure, you got to have 6 months worth of cash, but get your hands on 6 months worth of silver. And at these prices, I know you said don't invest in one thing, but if I mainly cater to low income and middle class families, particularly in the middle class ranks, military families. And the reason I really like to devote my time to these folks is I think they're the ones who are most exploited by a central bank. And really, what I tell them is, even if you've never bought silver before, I believe that this really is the trade of the decade. Even though it has come way down in price, if you had to buy one thing and one thing alone, and you're just your average person, get on eBay and buy yourself a roll of silver eagles and put it away and forget about it. Don't watch the price of silver. Don't even think about it. But just gradually accumulate a position. You don't have to be some kind of academic or an astute investor. If you're just everyday ordinary American, get your hands on some silver, and I don't think you'll regret it.
Yeah, I do like a lot of silver, but if you have a lot of silver stored at your house, it can get kind of bulky. And like I said, the people, if they have the financial wherewithal to do so, and also the amount of money to do so, they should store precious metals in probably multiple countries. But then you're looking at quite a bit more money. Although now with BitGold and some of the other technologies that are coming out, I'm hearing rumors that BitGold may actually start storing silver and add Bit Silver, or there may be another company coming out with a similar Bit Silver product where you can use a gold-backed silver debit card. There's going to be the ability to store in multiple countries to protect yourself and things like that. But silver didn't come down since 2011 on fundamentals. A lot of it, right. There was a lot of manipulation involved. But people are just going to have to roll with the punches here. I mean, unfortunately, Phil, I think the average person, like you said, does get screwed, whether it's by central banks or government regulators, or, it's the big corporations who have control of the government regulators, or sometimes it's the government regulators doing it on their own because they want to show that they can, the large corporations, that they can go get a big job, they can go get a higher paying job at the corporation that they're supposed to be regulating.
Yeah, well, and you talk about silver being manipulated. I mean, what an easy market to push around. Frankly, I made a big purchase after it came down from 50. It came into the 30s, and I was like, well, gosh, I never thought I'd see this price again. And, I follow all the same guys that have been on your show. I mean, I have so much respect for Eric Sprott and David Morgan and others like him. And, frankly, I don't regret it. Sure, if we all knew in 2011 that it would have been 4 awful years for the precious metals, of course we would have sold our positions and then moved back in on January 19th. But, let's face it, none of us have crystal balls. All we can do is have an understanding of math, accounting, fraud, and the Austrian business cycle theory, and that's going to tell us where things are going in the long run. Sure, I wish I hadn't made a big purchase in the 30s, but silver is worth a heck of a lot more to me. I think, when it's all said and done, it's going to be certainly 3 figures, and maybe 3 figures times a couple. So just stay patient, keep on stacking, and don't get discouraged.
And I think that's good advice. I just want to thank you again for your time, Phil. And how can our listeners find your work and listen to your videos and your interviews? You do a good job with those. I've listened to 1 or 2 of them. And also, where can they get their book? Is it available on audiobook yet?
Unfortunately, it's not available on audiobook. I am working on it, but the duties of a father and husband slow me down. But I am on chapter 3, and I'm going to keep on working on it. But in the meantime, just like everything I do, the book is free on my website, philippkennedy.com, Philip with 1 L, Kennedy.com. And you give me your email address, and then you could download the file for free. I want really everyone to get our hands on it. I'll tell you right up front, Jason, if you're expecting something, from Murray Rothbard or Tom Woods or Peter Schiff, that's not what this book is. It's really designed for the folks that you meet at a holiday party who are absolutely clueless about what is going on. This is kind of like an intro. I don't want people to think, hey, this is like an academic treatise, and I'm going to get, a master's degree or PhD in accounting and fraud and Austrian business cycle theory. I only touch on each of these categories. I'm sure everyone in your audience could think of someone in mind immediately, a family member, someone at work who
rich Democrat friends who say, they're making a lot of money at their business or at their job and say, I wish Bernie Sanders was president.
Yeah. Well, and, I always joke, look, just because someone's got a lot of money, Jennifer Lawrence, Brad Pitt, baseball, basketball players, all these folks have a lot of money, and they're completely clueless as to why. They don't realize that it's only because of what little capitalism we still have left over that they have the lifestyle they've grown accustomed to. So, if somebody has more money than you and they're busy telling you Keynesianism works, don't be offended. Just say, look, I know it doesn't. I know you're clueless, and here's a little guide to show you how to go about it. And it's a fun book, I think. I've got tons of links to YouTube videos, reports from 2015, and different things that kind of make it interactive. So again, if you're new to all this material, you can click on the link, and it'll take you to a 3-minute YouTube video that explains what the Greater Depression will be like and things like that. So you don't have to sit down and read it all in one setting. But I get into basic financial advice too. I talk about insurance. I talk about real money, of course. I talk about renting, not owning. I talk about skipping college. I also talk about how the dollar is a sinking ship, and you really should choose countries that exercise freedom. I also teach you to avoid socialism, particularly using the example of Venezuela, and just teach you how to conduct your own due diligence. So that's where everyone can find the book. They also, as you mentioned, can check out my weekly podcast that I do with my brother John Kennedy, and that's on both iTunes, Stitcher, and YouTube. If you wait for the YouTube version, that comes out on Sunday nights, and I like to put in charts and photographs, and I think some people who have found that get a real kick out of it. We just talk about current events and how it relates to your money. And then, of course, we're putting something on our Facebook page every day called Kennedy Financial. We tweet at Kennedy Finance. And we're always looking for great guests like Jason Burak and other smart folks like him to talk about what's going on in the market and how folks can protect themselves.
Okay, great. Well, I think you're doing a good job there with your not-for-profit. We're looking to build an educational technology company with virtual classrooms and stuff, but we're gonna in the process of trying to make it affordable for people, so middle-class people or students, people at different price points can actually afford it rather than just hedge fund managers and things like that.
Well, I really wish you the best in your endeavor. I think that's something that's really needed. One thing I also wanted to mention lastly is if folks have any financial questions, again, everything I do is pro bono. This is all volunteer. We just want to get the word out, which you frankly have done an excellent job at. I'm just really astounded by how well your program is gathering the globe here. But they can always email me.
Oh, you've noticed my secret plan for world domination?
Yeah, but everyone can email me at phil@philip with one L, Kennedy.com, and I'll answer any question you have anytime. Nothing is out of the ballpark.
Okay, great. And this was an interesting interview for our listeners out there. Definitely, we don't have enough personal finance experts on. We had Nicole Lappin on, who had a Rich Bitch, and she has a book out called Rich Bitch, and she has an interesting take for how young females just graduating college can start saving, get out of debt. But you have more of an Austrian school perspective, because when I was trying to discuss some of the Austrian school stuff, it wasn't always going over so well. But that's just how the system is designed. Most people have gone through regular universities and things like that. It's difficult explaining regular common sense, free market ideals and libertarian ideology to them.
Yeah, well, it's not the answer that people want to hear. My favorite podcaster, Adam Carolla, once said that the truth to a lot of people is like garlic to a vampire. And frankly, that's what a lot of Americans today.
the truth is subjective
Yeah.
to most people. Yeah.
Right.
Okay, great, Phil. Well, thank you again for your time, and I'll definitely have you back on again in the near future.
Thanks so much, Jason.